evening, all. Ira Epstein with your metal market wrap-up. And this wrap-up is for Monday, and we are sitting here now at the 27th of June, 2022, just after 4:10 or so p.m. Central Time. My wife's dragging me out to an early dinner. That's why I'm doing this so soon. So the gold down, but you're seeing the other metals had an attempt at a bounce. Didn't do all that well when you look at the platinum. It got up to the 912 zone and gave a chunk of it back, and palladium also gave something up. Just not a clean picture as to what's going on. Volume not especially heavy today either. The stock market weighed under some pressure during the day, and bonds and notes, well, they continue now to add some premium. Now, about a month from now, we get the Fed meeting. I think I was looking at it today, and if I'm right, it's around July 26th. So there's plenty of time before that happens. But the talk is already that the market thinks that on interest rates, the market is not properly pricing what the Fed's going to do, and that there should be an inversion, they still think, between the 2 and the 10-year, where the 2 starts climbing and the 10 just sort of sits where it's at. We'll see if that's right or wrong. Cotton down the limit today is one of the markets I was looking at too. When we look at the gold market, as I see it, the bias is still to the downside. The market is sort of caught here in no man's land. It's been doing this, caught between this break low and these rally highs, and it's just been sort of stuck here since mid-May. So it's about 6 weeks of just drifting like that. But I think there's a downside bias, as you've got a clear pattern of lower highs, lower lows, which is bearish. The market fought a battle right here between the 18 and the 200-day average. That was the spot where I think pros, I'm right here, pros were telling their clients to be short the market. On this break, there's been reason to take some money off the table. And now the big question is at 1810.70, if you hit the lower band, what happens? And all I do is I look at the slow stochastic, the fact that the market's not embedded. Should it hit that, I would be ringing the bell, telling traders, come out of all shorts. And I certainly wouldn't want the market to go back and challenge the high that we had back here. So either break down now or probably a good time to take some money off the table, period, if you're playing the short side of the market. In the gold-silver ratio, don't know why the symbol's gone, but you're just still staying over the red line, which is the 18-day average, which means silver is weaker than gold. And you can see silver got to the lower Bollinger Band, whereas gold did not, right? So that's your weaker part. But it also held at the first challenge. And in my enhanced Bollinger Band course, I give you the reasons why when you hit these numbers, you always have to pay attention to slow stochastics to see, are the pros covering all their shorts, or are they covering a portion? I'm not going to spill the beans here, but they will cover something. In the course, I teach you, and the rules are explicit. They show you what's going on. Rallies in this market back to 2174 is the resistance, but when you have a market that's sitting here under 30, I'm not keen on telling traders to go short. Why? Why sell into an oversold market? You've already used the fuel up on the break. So let it work out of that and then see what the market does. In the copper market, you still have the bearish enhanced Bollinger Band right here with the slow stochastic embedded in here. All you did is move to the right-hand side. You have not, in any manner so far, said, hey, a big rally is about to happen in copper. If anything, the rally still looks to me as though it's going to get sold on a rally tomorrow if the market is higher. And I think the pros will bail on being short copper if the red line closes over 21. That's far away. It's only 12 basically right now. In the platinum, you're trying to embed. What does embedded mean? Embedded occurs when the slow stochastic readings go under 20, stay there for at least 3 sessions. Now, I am not saying days. This is a daily chart. It could be on a 5-minute chart, a 15-minute chart, a 1-hour chart, a weekly chart, a monthly chart. It's sessions. So whatever those sessions are, and when I'm coming here, you can see you have 1, 2, 3. There's your 3 in a row. That was the day before. So you got your embedded reading now. 1, 2, 3 with today. So I think the pros will sell this market on a rally to see what it's made out of, seeing if they can bring the market back here. What is this saying that we're down so much in platinum and palladium anyways? Well, it's saying that you don't have enough cars. It's really that simple. You don't have enough cars to pick up the slack. You got a rally in this market that carried from an oversold condition into the 18-day average of closes. For all of you, what do we call the 18-day average of closes? The line in the sand. It is the number at which above it on a closing basis you have a bullish bias, under it on a closing basis you maintain a bearish bias. And when you get to it, the market's telling you, I've worked out an oversold condition, I'm going back into a neutral to see what do I want to do next. Are these numbers away from 30 though? No. One of them still 26.94, still oversold. Then we get to the dollar index, which has worked off an overbought condition and gone back to that line in the sand to see what it's going to be made out of. So you put it together, you try to come up with game plans, and I'm going to repeat. I think if you learn how to work with Bollinger Bands, you have an edge on people, but you've got to tie it together with momentum. The band itself is neat, but the momentum gives you the edge because you get ahead of price with it. To learn more about it, take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.